Goldman Sachs is revising its housing forecast again, dropping a new note this week saying it sees home prices falling 1% through the end of the year before appreciating by 1.9% in 2024. Well, let's bring in Yahoo Finance's Dani Romero to help break this all down. So, Dani, what are the big takeaways here?
Rochelle, Wall Street has hit a little bit of a frenzy mode in slashing some of their year-end forecasts. Let's start with Goldman Sachs. In late September, the investment bank said that home prices would appreciate by about 1.3% at the end of this year. That's if the Case-Shiller index reported a 1.3% decline in the last 5 months of this year. Well, guess what? That didn't happen. Case-Shiller reported another record high in August. Home prices increased 0.9% month over month in August. It's also really important to note that the Case-Shiller index does have a lagging effect. And so the numbers we're seeing is from the summertime when mortgage rates were about to breach that 7%. That is to give you some context on what those numbers are reflecting right now. So with that in mind, Goldman Sachs is quickly changing its mind. And now Goldman expects home prices to appreciate by about 2% for the full end of the year this year. That's if Case-Shiller reports home prices declined by 1% in the last 4 months of this year. We have to wait and see if that happens. But moving forward for next year, looking onward, home prices are expected to appreciate by about 1.9% for the full year. And even further, I think this is a really bullish call from Goldman Sachs. But looking into 2025, Goldman Sachs expects home prices to be up by 2.8% for the full year. That's seasonally adjusted, remember. So really no relief, Rochelle. Goldman Sachs expects also affordability to be could improve over the next 3 years.
So, Dani, then what are we seeing with mortgage rates? Obviously, if you're trying to get into a home, what are the forecasts here?
Goldman Sachs is once again changing up their forecast. I think this is something that's happening across the board. But again, they're expecting in late September, the investment bank said that mortgage rates would land at 7.1% for the end of this year. Scratch that out. Instead, their baseline forecast for the 30-year fixed mortgage rate will land at 7.6%. That is pretty high. It's headed towards that 8%. And for 2024, they're expecting that mortgage rates will land at 7.1%. So a little bit relief. And if we look to 2025, Goldman Sachs expects that mortgage rates will land at 6.6%. But there are two reasons on why there is this switch around. One is that yields on the long-term dated bonds, they've been pushing up higher, and they have been drawing closer to the short-term bonds. And so remember, fixed mortgage rates are tied to the 10-year Treasury yield. And so there's been a lot of volatility there. And today there's been actually some pullback due to the jobs report. So the big movements in the bond market are really largely reflecting the strength in the economy, and also runs the risk that the Fed will hold rates high for some time. Another point that Goldman Sachs really points out for why they are changing their forecast for mortgage rates is the secondary mortgage-backed security market. They say that they've already been pricing a higher for longer in that mortgage rate environment. So really on the mortgage rate side, we could see more relief in 2025. Like I said, like they pointed out, it could end at 6.6%. But for this year, it'll end up pretty high at 7.6%.
All right, so I guess everyone has to have a little bit more patience and wait this out. Appreciate you getting us up to speed. Dani Romero, thanks so much.